Yo, what's going on, guys? Welcome back to another video. Today's topic is going to be on Wyckoff. I know a lot of people have been asking me to make a video on Wyckoff and if I use it in my trading and how I implement it. This is going to be the topic for the day. So getting straight into this video, I just want to quickly say that with the Wyckoff, I generally don't use it in my trading unless I see it. Because the problem with Wyckoff is sometimes you can like the problem with Wyckoff is sometimes you can think you see Wyckoff, you can see like the PSY, the automatic rally, the secondary test, the upper thrust after distribution, and all this stuff, but then it just won't go your way. So I feel like Wyckoff is no one really teaches it properly, and people start looking for Wyckoff like in the middle of nowhere, like over here. It's all just like on if you see Wyckoff happening in a key level, then obviously you would want to implement it. But if you don't see Wyckoff happening at all, then it doesn't really make sense to implement Wyckoff. So I'm gonna be taking you guys this trade that I took earlier. This is the previous or like the before. You can see the time and date, everything. So and then this is the after. As you can see, it came into the zone perfectly and sold off. But I'm gonna be going through my thought reason, my Wyckoff distribution schematic and everything. So starting off on the 1 hour time frame with this, I actually took a couple L's on USD CAD because I was trying to buy into this big like manipulation trap over here. So everyone can see that on the daily time frame that USD CAD is 100% bearish ever since the US economy came out with the COVID. Even before that, the US economy has just been in like shambles, just selling off a lot. And now on the 4 hour time frame, it's pretty obvious the market is bearish, but then we created this little, like you could say, manipulation phase to catch any buyers, to catch anyone that's buying into this little manipulation trap. Because obviously if the trend is going towards like the downside, it wouldn't make sense to counter that and look for buys, right? Even though we don't have any confirmation for buys, because people might say that we have a breaker structure right over here. But what they don't realize is that we failed to break past this previous lower high, because we created a high and then we created a low, created another high and lower low, and then another lower high and then a lower low. We failed to break past this lower high right over here. So this would have been your indication that the market is still bearish. And not only that, but if you went to the 1 hour time frame and you see after it came to that lower high, you can see that it actually broke structure right over here with this move over here. So that would have been your like little indication that the market is obviously sells, and you wouldn't really want to go against the trend. So after that, I dropped down towards, I think it was the 4 hour. See what the 4 hour say. So there was this it was a 30-minute, sorry. Yeah. I think it was in the 15, I'm not too sure. Yeah, the 15-minute, yeah. So I seen these two. Let's go to replay mode right over here. Let me delete all this Wyckoff. We'll do this all live. So basically there's these two levels of interest I was focusing on, as you can see right here, right? On the so there's this like little supply zone over here, the last down candle before the push towards the downside. And same thing over here. Go towards the 10-minute. You can see it's much more cleaner. This last up candle before the huge continuation towards the downside. So I was initially expecting the market to react off of one of these zones to push lower. I just didn't know which one, right? Because it's hard to predict which zone is gonna move off of. But what you could do is roll the odds in your favor by risking 1% on each. So even if this one gets stopped out, you still can fall back to this level. And while you risk 1%, your reward is going to be much more greater, obviously. But yeah, so we're focused on this level. We can see that it comes in. All right, so let's go to the 1 minute automatically right here. So on the 1 minute time frame, what I'm noticing right here is that we have our first PSY. So the PSY is basically a preliminary support, and it's initially like your clue that the market like slash trend is exhausting. So we can see right over here we have like our preliminary support. Label that as your PSY. So the automatic rally is basically where the market comes back down and then creates a huge automatic rally towards the upside to push higher. And then after the automatic rally, we have the secondary test right over here. Now the secondary test is basically just retesting any little bit of demand that was inside the automatic rally to push higher. And from here you can see that we tap into our zone. After we tap into our zone, we created our first sign of weakness. So this is the sign of weakness. The sign of weakness is basically the market pushing below the first initial automatic rally, right? And that's basically telling you your first clue that the market is going to be exhausting and the trend is going to be changing. Because if you look at the market structure now, you can see that before the market was came to the zone, it was really bullish, extremely bullish. As soon as it came near the zone, we automatically created this breaker structure right over here. So label that right here. We created this BOS right over here, and after that breaker structure, the market automatically made a rally, and then secondary test, and then it came and tapped into our zone right over here. It tapped in and it showed us extremely bearish pressure, moved about 13 pips, breaking structure over here and over here. So the sign of weakness was basically your indication that the market is, bearish now, and the trend is definitely going to be changing. Now all that's really left is after the sign of weakness is a upper thrust after distribution. Now you can see that we actually left this on a little bit of demand block right here, and now the market is going to use this demand block to push up into our area of interest right here. And when it does that, this is our upper thrust. So the upper thrust is basically the market taking out any highs over here, any people that were entering over here, clearing the stops, and so this is called the upper thrust. Now after the upper thrust, right, the market came into our supply zone, automatically tapped this in. I'm not in this trade yet. I'm still waiting for the UTAD. Now the UTAD can be extremely difficult because you have to be patient with it. But sometimes the UTAD doesn't even have to happen. What can easily happen is the market can just break past the sign of weakness, give you your LPSY, and then continue selling off. But in this case, I was waiting because I still didn't really see any entry reasons. And as soon as it came into the zone, I noticed that it was just like kind of consolidating inside of the zone, not really doing anything, just ranging from here to here. So I was like, in my head, I'm thinking that, all right, if the market really wanted to sell off by now, it would have automatically gone down. But clearly it isn't. So it's anticipating to break above this upper thrust and make an upper thrust after distribution. And after a bit of waiting, that's exactly what we got. We had that UTAD after distribution, right? And then from here, I'm looking at my, I think it was a 5-minute or the 7-minute time frame. Yeah, I'm looking at the 7-minute time frame, and I seen that we left this little bit of demand block right over here, this last up candle before the upper thrust after distribution and the push down. So what I did is I highlighted this level right here, right? I went down to the 1-minute time frame, and I was mainly just focusing on price coming back into here. So I had my limit set right over here specifically because there was just a demand block on the smaller time frames, and then we had my limit, and then TP was all the way down over here, and that was basically a higher time frame level right over here, order block right here. I'll go back to the 1-minute time frame and let's see what ends up happening. So the market taps us in automatically, puts us in the trade, moves about like a little bit in the loss, but overall goes down. And then basically the market just kind of moved down for a bit. Like it was just chilling inside of this area for a bit, and then we finally had that push down that we were waiting for. But then the market also did come back up to, let me find where it did that. Okay, right over here. So the market did actually end up coming back up. Let me delete this. So the market came back up specifically to test this previous supply right over here, right? Because this is the last down candle before the expansion towards the downside. So the market came over there, and then once it came over there, it automatically just started selling off, and entry was just over here. Sorry, the entry was over here, somewhere like right here. Stop loss was over here, and then TP, like we said before, all the way down here. Go towards the 50-minute time frame to see what actually ended up happening. So yeah, after it tapped into that, as you can see, it basically just went all the way down. Nice 18-to-1 risk reward ratio. Yeah, that's basically how I trade Wyckoff, because the problem with Wyckoff in my opinion is sometimes you see Wyckoff when you don't actually, it's not really Wyckoff. Like for example, in this area right over here, if I were to go towards the 1-minute time frame, let me highlight this. If I went towards the 1-minute time frame right there, I'm sure that you would start seeing things that you might think is Wyckoff, like an accumulation setup or something, right? You could say sorry about that. Yeah, but you could say okay, you have your PSY right here, automatic rally, secondary test, right? After the secondary test in phase B, and then spring. You see there's so much confusion on Wyckoff. I don't really use it in my trading unless I really see it. And I saw that the market tapped into my supply zone right over here, right? And it gave me a pretty good clean Wyckoff setup. But that doesn't mean it's going to do that all the time, because you also have to implement other things when it comes to Wyckoff. So sometimes, like I said before, you see Wyckoff, but you don't actually see it. It's just price action. So instead, if you have those situations, where the market is in your zone and you think you see Wyckoff but you're not confident in it, what you could simply do is, you know, go back to your simple break of structure and then retest the order block. Because look at price action in the zone right here. You can see that as soon as it came in, we had this little bit of consolidation where the market was just moving up and down, up and down, up and down. Like there's hundreds of entry reasons right over here. And like for example, right over here, the market, so right here, the market pushed out right over here, came into a zone, broke structure right here. You could have had your entry right over here, you know, at this last down candle with the stop loss above right over here, and then TP all the way back down, right? There's hundreds of entries that you could take. It all just depends on what type of lens you're looking at the market from. If you're looking at it from an institutional smart money concept lens, you could definitely get more higher IRRs and, you know, higher you know, probability. But if you're looking at it like a break and retest lens, like right over here, you could see that there's retail traders buying this previous resistance that turned into support. So you have to understand that there's many different lenses. All you have to do is back test and find what works for you, because what works for me might not work for you. And you know, that's what I had to realize the hard way. I, you know, back tested many strategies, never worked for me until I found, you know, what I found now, and that's what I'm showing you guys everything now. But anyways, this was a really good trade. Let's see how far it went. Moved about like, let's see, it moved almost like 110 pips. I only caught 80 pips on that. But yeah, that's basically how I trade Wyckoff. For any like questions or concerns, please leave a comment below. If you guys have any, you know, concerns, feedback, let me know. I'll get back to you as soon as possible. And thank you for watching.